Iran is OPEC's third largest oil producer and currently exports about 2.5 million barrels per day. Renewed sanctions could crimp those shipments at a time when global oil supply and demand have essentially balanced out. That increases the risk that the market could swing into undersupply and send out prices higher. And in the meanwhile, gold prices retreated today, set to book back-to-back losses as a strengthening dollar whipped on assets patched to the currency. So do you think or do you recommend to do hold or profit taking right now? How will Trump's decision influence the next moves for the heavy precious metals?
What we've seen in gold is this. We saw a big rally earlier in the year. We saw a sustained hold of those levels over the last, call it, month or 6 weeks. And then we saw a big pullback. And the big pullback came, we saw spec longs get out of the market. They were exiting, running for the doors once we traded gold below 1330. But ever since we hit that 1302 level, and we've sort of been slowly climbing higher, and the dollar's been shooting higher, which would typically be an adverse effect to gold. We haven't seen that. I think right now you're sort of seeing that, waiting for that momentum to kick in again. Will the speculators come in and lift the market higher, or will the dollar push gold lower? And I think right now there's sort of that waiting period, and the market is sitting very precariously between 1310 and 1320. If we get above 1320, yeah, I think the spec longs are going to win. If we test 1300 again, I think that the dollar will probably be playing a hand in that, and then you'll start to see those spec longs flip and become spec shorts, something we haven't seen in a long time in the gold market. So right now, I think it's a wait and see market, and as Treasury yields get to 3%, that's going to adversely affect gold. As equities start to rally again, that is going to adversely affect gold. So if gold can overcome those and get to 1320, I'm starting to be a buyer again, but we have to wait and see. We've kind of been spinning our tires here today. I think that ultimately it's going to come down to not only Fed policy, but asset allocation. If we start to see Treasury yields get north of 3%, it's going to be negative gold. And if equities keep going higher, it will be negative gold. But the dollar will be the ultimate decision maker there. And if the dollar continues to see the trend that we have, that will push gold prices down to 1300. At that point, I'm a seller. This is Todd Colvin coming to you from the floor of the CME Group.